Welcome back to Instables, everyone. Welcome to the Sunday Night Countdown. I'm going to go to the top 5 stocks that a lot of people have been asking if we're going to possibly recover from. I'm going to go over AMC, PLTR, NIO, Charging Point, and LCID. Lucid Motors used to be Churchill Capital, cciv. They just merged into Lucid Motors. We're going to see which exact points each one of these need to break above to have that major breakout that we're looking for, if we're going to possibly recover, and what exactly would have to happen for us to recover in each one of these. And the only thing I ask for return for all of this is you guys smash that like button and hit subscribe if you guys want to see more chart updates on potential breakouts leading into the next day that we mentioned throughout the week. So let's jump into this one. So the first one of the 5 that I want to go over with you guys here is AMC. Now, before I do get started on AMC, I want to mention that we do alert penny stock breakout alerts throughout the day. So if you guys want to see all our penny stock breakout alerts for the day, go to instables.com in the description below. You guys will never miss a penny stock breakout alert for the day. Again, we always mention somewhat of a runner throughout the day. And especially in a market like this, when things are selling off, it's nice to see some things that are actually moving, in my opinion. Again, this is not financial advice. This is only what we do throughout the day. Again, there's about 200 members now that we have in the Instables room, and that's within 2 months. So we have a ton of members in there. I definitely would check that out if you guys want to see more intraday plays. Again, this is not for possible swing trades or long plays. This is going to be only intraday alerts that we're going to see throughout the day, and this is not financial advice once again. But again, here on AMC, I want to make sure we do cover them because, again, we can see here that we did have our bull flag. Looking to see if we can confirm above this bull flag. We dropped below it, showing us that we might have a curl down here on the 20 MA, and sure enough, we have been curling down. We crossed below the 50 MA. Again, this is the 50-day moving average. We dropped below it with the 20-day moving average, showing us more bearish momentum than bullish. Again, because we could not hold above this bull flag and possibly break above it to have that major squeeze that we were looking for. Again, we have been holding with the 20 MA below the 50. We're going to be looking to see if we can get the 20 MA to curl back up and cross back above the 50 to give us more bullish momentum. But until that does happen, we are more in a bearish momentum state than we are in a bullish momentum state. So in my opinion, we need to break above this 58.61 mark with the body of the candle. Again, this is where we previously did consolidate multiple times. We had our bull flag at this point and we wanted to confirm above it. So I want to see the body of the candle close above this 58.61 mark that we could not get the body of the candle close above at this point. You guys can see we almost had that happen right here, but we had a rejection to the upside, showing us a bull flag here, showing us that we might consolidate more, and we continue to come down. Now, I'm going to go over the RSI with you guys so you guys can see what we're looking at here. Again, we had bullish divergence. We mentioned on the market update yesterday that we had bearish divergence in the market. Again, that could also make AMC continue to sell off, but you guys can see here that we had bullish divergence, showing us that we could possibly have a turnaround here, and sure enough, we did have a turnaround. We had a nice little bounce here, but however, the 20 MA still is below the 50 MA, showing us that we might have a continuation sell-off. So in my opinion, I definitely would be holding off on AMC until at least we hit this 58.61 mark to get more bullish to momentum, in my opinion, and we could possibly have that squeeze that we're looking for if we somehow do get the 20 MA to cross back above the 50 before we do drop below this 31.81 mark that we are trying to avoid dropping below. And the reason why this 31.81 mark is very key is because, as you guys can see, again, we did have our bullish divergence at this point. If we drop below our bullish divergence, then of course that would be very bearish. And also, you guys can see we do have our previous breakout point and confirmation at this point that we did have on our second gap up after we had our first gap up breaking above our previous rejections that we did have at these points. So our second gap up point was here at 31.81. If we cannot hold above this and bounce back from this level, in my opinion, then we could have a possible gap down here to this previous breakout point that we did have around $15. So I definitely would be careful on AMC until we do cross with the 20 MA above the 50. But until we do, in my opinion, we're still more bearish than bullish. As you guys can see, the chart is showing us that we are more bearish than bullish. So the next one I want to go over with you guys here is LCID, and I want to go over Lucid Motors because, again, cciv had a lot of momentum and a lot of people are having a lot of hopes in Lucid Motors for a possible major breakout like we did see previously, jumping all the way up to around $64, which we did alert around $14 in a video back in around January, I believe it was. Yeah, January 21st. Looks like we had that breakout, and we're going to look to see if we can possibly consolidate here and have a major breakout. Now, what we are looking out for here is to break above a specific point that we did mention here previously. Now, as you guys can see here, I'm going to pull up the VPVR so you guys can see the most amount of volume that was traded within the stock's time period and what exact points we need to break above to have that gap up that we're looking for. So you guys can see we're sitting around $23.69 with bearish divergence on the market. Again, we did mention the market yesterday. If you guys want to see what bearish divergence are and exactly what the market does look like, check out that video that we posted yesterday. But as you guys can see, we're trying to break above this $30 mark. We want the body of the candle to close above this $30 mark. But I'm going to zoom in here so you guys can see what we're looking at a little closer on the 20 MA and the 50 MA. As you guys can see, we are crossing below the 50 MA. We need to cross back above the 50 MA, in my opinion, to have more bullish momentum. But however, as you guys can see, we have been overall consolidating. So in my opinion, if we do drop below these levels, in my opinion, dropping below $17 would be very bearish. We could definitely have a major gap down at that point, as we did have a previous breakout at that point, and we also did bounce off of that point recently. So if we drop below that point that we did bounce off of, in my opinion, then we could have a major gap down at that point. That's usually what does play out. Again, this is not financial advice. This is usually what plays out. But however, as you guys can see, we are going to see if we can break over this $30 mark to have more bullish momentum here. Again, I did pull out of Lucid Motors before the merger did happen because a lot of people were expecting a lot of sell-off, and sure enough, that did happen. But however, as you guys can see, we are consolidating overall, looking to see if we can make a large move up or possibly even a gap down below that 1750 mark that we are looking at. So Lucid Motors, in my opinion, I still do like Lucid Motors very much, and I do believe they will be competing with Tesla. But however, as you guys can see, we do need to make sure we do get more bullish momentum, make sure the market doesn't completely destroy this chart, as the market is sitting on bearish divergence. So in my opinion, we're going to definitely be careful on this one. Make sure the play does come to us. Make sure we do get better market conditions to get better swing trades, in my opinion. But if Lucid Motors does break over this $30 mark, I will be possibly entering if we do get more volume confirmation on this breakout to have this major move up that we could have from this previous gap down that we did have. So in my opinion, Lucid Motors still on the watch, but I definitely would be careful. Make sure we do get more momentum and make sure we do get better market conditions coming into the market, in my opinion. So the next one I'm going to go over with you guys here is NIO, and I want to go over NIO because a lot of people have been wondering if we're going to possibly have a major breakout or if we're going to possibly have a possible sell-off, since a lot of people have been losing a lot of confidence in Chinese stocks. So you guys can see here, we have been on quite the run recently. We had that 20 MA crossing above the 50 that we did mention, and we have been breaking out since then, jumping all the way up to that $53 range that we did mention. Now, we got rejected exactly at this point. We did mention this multiple times, as this was where we previously got rejected multiple times. Again, having this cool off is no surprise, as we have a major resistance that we did come up to and got rejected on, as the market has been on pretty choppy market conditions overall. But as you guys can see here, we have been continuously selling off, coming down to those levels that we did break above when we had the 20 MA crossing above the 50. So we're going to see if we can hold above this 37.54 mark, in my opinion. And if we do not hold over this 37.54 mark, in my opinion, we could have a continuation sell-off. But as you guys can see here, we do have the volume profile that we have here as a very key point here to break above this $45 mark and hold above it going into next week would be very key for us with NIO. If we cannot hold over this $45 mark and we somehow drop down below this 37.54 mark, in my opinion, then we could have a possible continuation sell-off. Now, if we do break above this $45 mark and we do break above this $53 mark that we're looking for as our major resistance that we did previously get rejected at and we got multiple rejections at and had our continuation sell-off at, then in my opinion, we could have a nice breakout from then and possibly have a nice gap up and possibly break into new highs at that point. As you guys can see, we have very little volume at these points to break above, in my opinion. But again, NIO definitely on the watch still. But however, I would be just setting my alerts here on NIO to make sure we do catch this one, and I would not be staring at this one too much, as again, there's a lot of confidence that has been lost in a lot of Chinese stocks, and we could have a possible continuation sell-off, even maybe a possible gap down, as again, NIO has been previously down to these ranges around $10 and consolidated multiple times at these levels. So dropping down to these levels would be no surprise to us, as the market is sitting on bearish divergence, and we could have a possible cool down in every stock if for some reason the market does have a huge gap down. Now, the next one I'm going to go over with you guys here is PLTR, and I want to go over PLTR because a lot of people have high expectations for PLTR, wondering if we're going to possibly break into this range that we saw previously around $45. Now, we have been continuously selling off since then. We did mention that they did break above our descending wedge that we did have. We broke above it, and the 20 MA crossed above the 50 MA, showing us that bullish momentum state. But as you guys can see, we got rejected at a very specific level, just like we did on NIO, almost specifically identical to what we saw on NIO. As you guys can see, the 20 MA is still holding below the 50. We're going to see if we can cross above the 50 MA and again break above our previous volume point that we do see here on the VPVR, showing us that we do need to break above this point here around $24. If we could break above, in my opinion, this $28 range that we were looking to see if we could break above previously, as we did have our confirmation on our gap up at this point, we're going to see if we can possibly break above that level again and possibly have a bullish momentum state from that level. But in my opinion, if we do drop below this 1894 mark that we did come down to, we consolidated it and we had a continuation sell-off. We got a nice rejection to the downside here around 1669. But as you guys can see here, this 1894 mark, in my opinion, dropping down to these levels, in my opinion, would be very bearish for us to drop down to. As you guys can see, we are trying to hold this very key point here at $20. If we cannot hold this $20 range, then we could have a possible gap down to this 1894 mark. And if we do drop below this, then we could possibly have another gap down that we do not want to see on PLTR. So in my opinion, PLTR definitely still on the watch, but however, as you guys can see, we have been on quite the sell-off recently. We're going to see if the 20 MA can cross back above the 50 and break over this $28 mark that we are looking for. So in my opinion, again, PLTR is still an amazing company, but as far as an entry, you want to make sure we are in more of a bullish momentum state. And also you guys can see yesterday's video that we did mention the market has been on bearish divergence like we have been mentioning every one of these stocks, and we could have a possible market cool down, which could give us more of a sell off here on PLTR. So I definitely will keep them on watch, but however, I'm not going to be swinging too many plays. Again, if I am long on PLTR, that's a different story. But as far as a swing trade, I would not be entering this one for a swing trade quite yet until we get more bullish momentum, and also until we do get better market conditions in the market. Now, the next one I want to go over with you guys here is Charging Point, and I want to go over Charging Point because Charging Point is an electric vehicle charging company, and in my opinion, has the most potential out of all the electric vehicle charging companies. As you guys can see here, we have been on quite the run. We have been mentioning them multiple times as a nice swing trade in the past, and you guys can see the 20 MA did cross above the 50, showing us that nice bullish momentum state. As you guys can see, we have a very key resistance, just like we do on NIO, and we saw on PLTR. We have a very key resistance that is here at 39.84, and we could not break above it. As you guys can see, we came up. We didn't get rejected exactly at that point, but we are looking to see if we can break above that point to have that major gap up that we're looking for. But as you guys can see here, we have been continuously selling off with the 20 MA dropping below the 50 like we have been looking at on every one of these stocks. And as you guys can see, we're looking to see if we can get the 20-day moving average to cross back above the 50-day moving average to give us more bullish momentum on this play. And also we are sitting on bearish divergence in the market, so we are going to definitely be careful on this one. But however, going to the next week, if we can break over 28.54 and we could break into that 32.62 mark, then we could have a possible nice gap up here to 39.84 and possibly testing these levels here. And we might have a rejection at that point, possibly come down and retest the $32 mark and possibly break out from then. But however, Charging Point, in my opinion, is an amazing long play, but not quite the swing play that I would be playing into. So in my opinion, a nice 1 to 2 year hold on this play would be great. But however, short term, in my opinion, we're going to definitely be careful as we are sitting on bearish divergence in the market. And we are looking to see if we can hold this level here at $19. Again, we are bouncing off of around the $19 range multiple times. And if we do drop below this $19 mark, in my opinion, then we could have a possible gap down to these levels that we have previously consolidated at around $15. So in my opinion, we're trying to avoid dropping below that $19 mark, and we're trying to get the 20-day moving average to cross back above the 50 and break over this 32.62 mark and possibly have that gap up here at 39.84. And in my opinion, to get that confirmation on an extreme bullish momentum state, then we need to break above this 39.84 mark, breaking above $40 to get that momentum that we're looking for with the body of the candle, again with volume and again with buy pressure. As you guys can see, the EMA lines still are below the MACD, showing us that we may have a continuation sell-off. If we could get the EMA lines to cross back above the MACD, then we could have a possible continuation breakout. But however, until then, we are sitting more bearish than bullish at this very point. And if you guys do want to see all our penny stock breakout alerts throughout the day, go to instables.com in the description below. You guys will never miss a penny stock breakout alert throughout the day again. And everybody that has been supporting the channel and everybody that has been in the comment section, I appreciate everyone. You guys, as always, much love to you guys. And if you guys do like this video, it does help other people find it, and it does help the channel grow. And I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.